As you all know by now, I believe planning for your future is important when it comes to building wealth and becoming financially free. One of the most critical steps is looking at ways you can invest your money to maximize your returns. Webull is an all-in-one, self-directed investment platform that provides an amazing user experience. Some of the key features are zero commission, free real-time quotes, multi-platform accessibility, full extended trading hours, and 24/7 online help. Create an account by clicking on my exclusive link in the show notes, and Webull will give you 2 free stocks valued up to $250. Even better, deposit funds into your Webull account, and they will give you an additional stock valued up to $1,400. Start investing today with Webull and thank yourself tomorrow. Welcome to the Financially Free Journey podcast, and I am your host, Courtney Dyer. This podcast aims to dispel the seemingly complex topic of personal finances, money management, debt, credit, retirement, and even investing. And guys, in today's episode, we are going to be discussing investing basics. We're going to go through some of the most common and basic terms and products that you need to know in order to start confidently investing today. So to go over this topic, I have asked a special guest who is actually an expert in this field to join me today to help discuss investing. Trevor Hanson is a vice president and a senior wealth advisor for Zions Wealth Advisors. He has over 14 years of experience in the financial services industry, specializing in comprehensive, personalized advice to families and individuals with substantial wealth. Shortly after September 11th in 2001, Trevor joined the United States Air Force Reserve as an F-16 crew chief. And being responsible for the lives of pilots and other crew members, it really shaped Trevor into the detail-oriented critical thinker he is today. He served his country honorably for 6 years and still strives to apply the Air Force core values with each encounter that he has. At a previous financial institution, Trevor was also recognized as the most successful advisor on the West Coast and one of the top 10 in the entire country. He had also mentored and trained hundreds of successful financial advisors and private bankers all over the country, one of the many ways he has succeeded in giving back to his profession. So thank you so much, Trevor. Thanks for letting me read that. I know it's sometimes embarrassing to hear people talk about you, but thanks for letting me read your bio, and thanks for coming on today.
Yeah, thank you for having me. It's great to be here.
Well, as a successful senior wealth advisor and helping so many people achieve and build wealth, I know that your advice today is going to really inspire our listeners to really take that next step in their financial journey and, of course, building wealth. So I really want to dive into the basics of investing so our listeners can really feel empowered to start investing or at least increase their current investing portfolios. So first question, are you ready?
I'm ready.
Can you give us a brief description of what is investing exactly?
Yeah, pretty simple. Investing is the act of allocating funds in an asset or committing capital to an endeavor, a business, project, real estate, with the expectation of generating income or profit.
I like that description. That is pretty technical. Thanks for giving us that overview. And really, now that we know investing involves committing money in order to earn a financial return, and that this is really essentially, this means that you need to invest your money to make money to achieve your financial goals. Where do you suggest a beginner investor has to start? How does someone know if they should start investing their money versus just saving their money?
Yeah, well, first of all, people need to have 3 months worth of emergency savings, right? So, I mean, if you're going to invest in the market or any type of real estate, if it goes down in value or you lose your job or you have an emergency, you need cash you can get to, so you don't have to touch those investments.
Absolutely.
Right, exactly. And then also, if you want to purchase a house as well, if you don't want to start investing right away, but you want to invest in a house, you need to save up 20% of the down payment. And so you don't want to have that money in the market either as well.
Absolutely. Some good examples of when we need to have savings and liquidity versus investing. So here's the thing. Saving your money varies from investing your money in a few different aspects, as you just talked about. First of all, you need to understand what your time horizon is. And that, guys, is really just a fancy investing term for knowing how long you can invest your money before you need to spend your money. After you understand your time horizon, you need to think about the access you may need. That's what Trevor just talked about. Are you going to be buying a home? Do you have liquidity for emergencies? And this can vastly change the options that you have for those funds and really what you ultimately decide to do with your money. So also remember that investing is not just for the Warren Buffetts of the world. If you have eliminated bad debt and you have an emergency fund like Trevor talked about, you need to start thinking about investing for your future. What are your thoughts on that, Trevor?
No, I agree. I think you need to pay yourself a dividend, right? So if you make every penny and you spend every penny, you're not saving anything. So you're working for free.
Yep.
And you got to remember, the younger you save, the more your money will accumulate. So you just look at the simple rule of 72.
Love that rule.
Right. So if you divide the percentage you're earning by 72, that's going to tell you how fast your money's going to double. So let's say you're getting 70 or 7%, it's going to double every 10 years.
Yep.
But if you're only earning 1%, I'd probably say that's probably not what you're earning in a savings account right now, right?
Right.
It's going to take you 72 years to double that money. The other thing is that you do need to save for retirement as well. You don't want to work forever, and either you decide to retire or you have to retire because of health. So you need to start saving now for retirement. It's easier to do it when you're younger.
Absolutely. Such a great rule. And if you don't know about the rule of 72, and that's your first time hearing it, I want you to make sure after you listen to this episode that you go and Google the rule of 72. It's such a critical rule to understand when planning and investing your money. So now that we have a pretty good idea around what investing is and when someone should start to think about investing, let's dive into some specific investing products and terms that I really think our listeners should fully understand. Okay, Trevor, time for the nitty-gritty. Explain to the listeners what a stock is, what a bond is, and when should someone consider investing in a stock or a bond?
Yeah, I have a lot of clients I deal with, and I ask them what a stock or bond is, and it might seem like they know the answer to that question, but they never do, right? So a stock is simply an ownership in a company. So if you pay money for a stock, you own that company. It'll fluctuate up and down quite a bit, but you get to participate in how well that corporation does. A bond is going to be that you're lending money to a corporation, right? So a bond could be to a corporation, it could be to a state, it could be to the federal government. But what they're saying is we're going to pay you back at a certain percentage. Bonds usually keep up with inflation. That's usually their job. Stocks are really the only things that outpace inflation. So it's important to know the difference. So the younger you are, the more you want to own stocks because you have a long time horizon. The shorter time horizon you are, if you're in retirement and close to retirement, you should own some bonds, right?
Absolutely.
And
well,
then
you really understanding equity in a company versus being a lender to a company, right? Is that a good way to think about
I love
the
that. That's great. Then also, if you're going to invest in stocks and bonds, you can do a little bit on your own, right? But you want to make sure you're broadly diversified. So you're going to want to incorporate mutual funds and things like that. We're going to bring that up later, but stocks are really for if you want to kind of like dabble a little bit on the side, but mostly for people that have net worths of $1 million or more, and that are in a high income bracket where they want to control their taxes.
Oh, good to think about. So investing in individual stocks really is something that someone should look at doing later on in their financial journey when they're building wealth.
That's correct.
Very good. Well, so now that we have that fantastic explanation and some really good insights as to when you should consider stocks and bonds as investment options, investing and diversifying your funds within the stock market is a top strategy that the wealthy use in order to continue to build their wealth. If you're trying to strengthen your financial health and have ever thought about investing, Webull is a platform you need to check out. Webull was designed by top experts in the financial and tech industries to create a streamlined and simple user experience. Webull knows that you, as the individual investor, is an important part of the market and you should not be ignored. You should feel empowered with better information, tools, services, opportunities, and lower costs. Some of the key features are zero commission, free real-time quotes, multi-platform accessibility, full extended trading hours, 24/7 online help. Create an account by clicking on my exclusive link in the show notes, and Webull will give you 2 free stocks valued up to $250. Even better, deposit funds into your Webull account, and they'll give you an additional stock valued up to $1,400. Start your investing journey today with Webull. A common question I get from beginner investors, and I'm sure that you get this as well, Trevor, is what the heck is the difference between an ETF and a mutual fund? Can you talk about what ETFs and mutual funds are, and when should someone consider them as options for their investment objectives?
Yeah, I mean, that's a good question. ETFs are kind of new, right? So let's talk about mutual funds. We'll get into ETFs. Mutual funds are a way for you to invest but be diversified. So let's say you only have $5,000 to invest, and you want to participate in 200 stocks, so that way you're not just invested in one stock that could go down and lose all your money.
Right.
So a mutual fund is a way for you to pull your money with other investors to be able to be diversified correctly. Now, there are stocks where you need $5,000 to buy one share, right? So this is why this allows you to diversify properly.
Yeah.
Now, a mutual fund is going to be more actively managed, where an ETF is going to be more passive. A mutual fund trades at the end of the day. An ETF trades throughout the day like a stock. An ETF is going to be more passive investing and really cheap when it comes to internal fees because they're not doing much inside of it, right? Now, they come in all different shapes and sizes. So, you have mutual funds that have 12 mutual funds inside of it, right? Then you also have target funds that actually say this is the date you're going to retire, and they'll become more conservative over time. Then you have mutual funds that just focus on certain sectors, right? And so, there's 10,000 different mutual funds to choose from, and there's a lot of tools out there to help you with that. And costs are going to be different depending on how much management they do. If a mutual fund's doing a lot of management, they're going to be higher fees.
Right.
If you're an ETF that doesn't do really any management but gets you a little bit of diversification, then you're going to pay lower fees. So,
well, it makes sense. You're paying for the time of the active management in a mutual fund versus an ETF. It's more passive investing, but you're going to have lower fees associated with it, right?
Yeah, that's right. Great explanation.
And a good visual, guys, is if you think about a basket and you have a bunch of different stocks inside of that basket, that is essentially what a mutual fund or an ETF is. You're going to have tons of diversity. You're going to be able to dabble in the market and have ownership of various stocks. Usually it follows, what are some of the different stocks that they follow? Is it the top 500 or 100? What can people expect?
Yeah, so you can get ETFs that follow the S&P 500
Right.
or the Russell 2000. International index like the Euro Stoxx 50, which is kind of like the Dow Jones of, Europe.
Right. Okay.
Yeah,
So there's a lot of options. I mean, you can dabble in international and domestic.
That's exactly right.
Very good. So, okay, there are some similarities in ETFs and mutual funds, but there are several differences in the way that they're managed, which we just kind of talked about, as well as the costs and the fees associated. So, how do these differences affect the risk that is involved for the individual investor?
That's a great question. So if you have passive investments like ETFs, when the market goes up, they go up substantially with the market, right? You get to participate in what the S&P 500 is doing.
Right.
But when the S&P 500 goes down 50%, those ETFs are going to follow right behind that, right?
Uh-oh.
So, yeah, right. If the ETF goes down and the S&P goes down 50, you're down 50%, But if you have active management in a mutual fund, hopefully some of that downside is cushioned. That's what the active management does.
And that's why you're paying a higher fee in a mutual fund.
That's exactly right.
Very good. Now, it's so important to fully understand these risks associated with your investments, guys. So I highly suggest that you meet with a professional to discuss the risks so you can really make the best decision for your money and your personal objectives. So now a lot of people associate instinctively real estate with investing, but they're detoured from taking that first step because they don't think that they have enough capital to get into the quote unquote real estate game. So talk to us about how a beginner investor can participate in real estate investing without a ton of capital.
Right. I think the most common thing I see with people starting out is they start out with their first home, their starter home, right? They move out of that, buy their forever home, and then rent the first house out.
Yeah.
I think that's probably the easiest way to get started. But if you want to do it another way, if you want to buy a residential property or commercial property to rent out, you need to have at least 20% to put down. So you're going to have to do some saving there. And the other thing is you want to make sure you're researching what the rent is out there and the price of those properties are out there so you're not overpaying, and you make sure that you're going to collect more rent than you're paying in a payment.
Yeah, absolutely.
I think the biggest thing to remember is that, remember, your loan payment's kind of set, right? And you might have some maintenance along the way, but the loan payment's not going to go down, and over time you'll be able to raise the rent, and your positive cash flow is going to increase every single year.
Absolutely. that passive income, I think, is a huge driver for a lot of people that are invested in real estate investing and having that cash flow every month. So it sounds like it's a good option for an investor.
No, that's right. And then, it just depends. You want to be diversified, so you probably want to have a stock and bond portfolio as well as real estate.
Absolutely.
But the other thing is you can depreciate that real estate as well, and that might help you a little bit on taxes.
Is there a way to participate in real estate through things like real estate investment trusts? Can you talk to us a little bit about that?
Yeah, I mean, there's real estate mutual funds, there's real estate REITs, right? Real estate investment trusts that lock up your money for 5 to 7 years. So it just depends. Do you want to be in a fund or a private kind of investment? Or do you, and kind of be a little bit more diversified, or do you want to have your own property that you own? Remember,
do you want to be a landlord, or do you want to be an investor? It's really a big part of the difference there, right?
Yeah, exactly. But I would just say, like, I have a lot of clients, and they do real estate, and they only do real estate for their whole life. And when they're in retirement, they regret that they have done that their whole life, because now they're kind of stuck in real estate.
Right.
They're in retirement. They're running these properties themselves.
Maybe they're hiring.
Yeah, maybe they're hiring property management, but they're not liquid, right? And they want this liquidity to do different things in retirement, but they don't want to pay the taxes on selling those properties. So, again, it's good to be diversified and have liquid assets as well as hard assets, real assets.
So they can complement each other for different parts of your life and the financial objectives you're trying to achieve.
But don't overload yourself in one or the other.
Right. So much information to digest, and a lot of our listeners have a lot to think about now. And remember, guys, there is a lot more to investing, and we really only scratched the surface today when it comes to what is available to you. But again, I cannot say this enough. Take the time to meet and discuss options with a professional. Your future and achieving your money goals is worth the time. Future you will thank you for taking the time to go talk to a professional. Trevor, what is some final advice or tips that you would like to leave with the listeners today?
Yeah, again, I just reiterate some of the things we said. If you're not paying yourself a dividend, putting something in savings or a retirement fund, you're working for free.
Absolutely.
And then the other thing is that you need to go into the type of investments that you're comfortable with, right? Because if you go in the stock market and the market goes down dramatically and you're just going to sell it for a loss anyway, you got to figure out if that's the right investment for you.
You have to understand your risk appetite, your time horizon, really what your financial objectives are, and talk to a professional, right? I'm going to drop that one more time.
Definitely talk to a professional if you don't know what you're doing.
Very good. Well, thank you so much again for joining the show today. I know that you have definitely inspired our listeners to continue on their path to becoming financially free and to taking the next steps when it comes to investing. Thank you for tuning in today, guys. If you're not already, make sure that you're following us on Instagram. It's @FinanciallyFreeJourney and Twitter @FinanciallyJ. I post daily tips and motivation to help you on your financially free journey. Until next time.
This information is not meant as a comprehensive guide to investing or as a source of specific investment recommendation. The information is general in nature and is not intended to be and should not be construed as legal or tax advice. To determine which investments may be appropriate for you, consult your financial advisor prior to investing. Investments are not insured by the FDIC or any federal or state government agency and are not deposits of or other obligations of or guaranteed by Zions Bank Corporation, National Association, or its affiliates, and may be subject to investment risks, including possibility of loss or principal value or amount invested.
Have you heard of Webull? It's a simple, easy-to-use platform for investors just like you. Create an account by clicking on my exclusive link in the show notes, and Webull will give you 2 free stocks valued up to $250. Even better, deposit funds of any amount into your Webull account, and they'll give you another additional stock valued up to $1,400. Start your investing journey today with Webull and thank yourself tomorrow.